So yeah, hey, welcome back to the sixth chapter already. Yeah, I just want to go over the, I'd say, important points he mentioned. But more or less these are just primarily the continuation patterns taken. And yeah, I'm just gonna go over them. I haven't really looked at a chart and try to find them. So just gonna be a quick video where I talk about every pattern. So I sort of have a summary of it. So first of all, let's actually go over a couple of basic things you mentioned, which is there's always 4 points needed for a pattern. Why? Well, because you need 2 points to draw a trend line, and then of course you need 2 points at the bottom as well, as you can see here. So 5 and 6 weren't actually specifically needed to draw this trend line, but it's really it confirms that it does exist. This pattern it makes the pattern sort of stronger. So first of all, there's actually 3 different triangles. So you get a symmetrical, which you see right here, a descending, and a ascending. So what the thing is with a symmetrical is basically from where it came from, it will continue this pattern. It doesn't have to, but it's most likely gonna the price is most likely gonna break out in the direction of the prior trend. And then this trend is also most of the time taken from 1 to the base, and you can double that. Which is probably most of the time the breakout price, sort of. And of these patterns, another important thing is it should break out from like 2/3 to 3/4 to the end. So you don't want it to break out at the end because that's not clear as where the price is gonna go. But as you can see, if we draw a line right here, you can see it. If this would be the half, it definitely went out at 3/4. So you wanted to have it between 2/3 and 3/4. So about here, right? So yeah, this just resumes the previous trend. And let's go to this one. Yeah, so this one is what I mentioned. Here you can see this is basically the same, but what they mean is the breakout price. So you can see they took AB and they just duplicated it, or actually put it there, and that's the projected price, right? Or you can draw actually parallel line to the bottom line and have that as like a breakout price. I'm not sure which one I prefer, but I guess the parallel line does give a lot more overview because it just shows what the support line will be, you know? As opposed to this one, as you have one single line, you can still look, I guess you're gonna look at it more vertical or horizontal, I mean. Sorry, it's kind of late, so. So here we have the ascending triangle. This one mostly being formed within a trend and is a bullish signal. So what you will see is this has a flat top and a ascending triangle, as the name suggested it. You can see the breakup price is also taken here. And what is important about these triangles is the volume should diminish as the price swings narrow within the triangle. So it should decrease when it reaches here. So a lot of volume, yeah. Right, and there's actually the volume is more important on the upside than it is on the downside. Why? Because if the volume is high on the upside, and so you actually know people are really trying to break through, but a lot of people are selling, a lot of people are buying, so it just stays here. When that happens on the bottom side, it's more likely to escape to the bottom side. So you want to see more volume on the peaks and less on the troughs. And then we're going to go to the descending triangle, and this one is kind of similar to the ascending, but then you have the horizontal line at the bottom and the descending line at the top. And the same thing applies here. So yeah, I'm just going to go over to the next one. Or actually, what is important to know of this, where is it? Yeah, so what is important to know is with a descending one, the volume should be heavier on the downside because people are trying to break down. And like I said, the volume is more important than the ascending triangle. So that's one thing to remember about this one. Then we're going to go over to this pattern. This pattern isn't, he mentioned that this pattern is really rare and it's really difficult to trade within this pattern. because you can see there's actually like an ascending line at the top and there's a descending line at the bottom. So this one is pretty hard to trade. It's called a broadening top. So not sure what to make of this. I guess it's good to recognize this when you see it, but it's kind of similar to the symmetrical triangle as it can go in any way. Right. Now we'll go to the flag. This is a bullish flag. Could be, as you can see, it's sort of how do you call it? It's formating its next upper move and mostly forms on the halfway point of a rally. And what is important to know here is the volume should increase on the rallies, of course, but you don't want to see a lot of volume in the flag. You actually want to see it only on the up rallies because that means there's a lot of room for a rally upwards. If the price can maintain this price range on a low volume, that's great to know. We're going to go to the next one, which is going to be a bullish falling wedge. In my opinion, it's kind of similar to the ascending, or I mean the descending, because you still got bottom on, well, actually the almost horizontal line at the bottom, but it just means it's sort of getting its weight back by falling down a bit. But as long as it doesn't really fall down, because most of the time you'll see after a rally, they will move back to 1/3 to 2/3 of the price. Which I can think you can take for this one as well, because you can see it moves back around 1/3. But I'm not sure what to make of this one. I haven't really looked at it. And this one is the bearish wedge, basically the same as the descending one, or the ascending one. I mean, I'm sorry. No, the descending I think is bearish. So basically the same. Now we'll go over another example, which is going to be a measured move, I think. And basically what this means, AB will get duplicated into CD. Actually, they should move it to over here, but that's fine. But basically, this is like a halfway point. So you can just see it's a retracement back. I'm not sure what this level is. Looks like 2/3 or it could be 50. I'm not sure how long this was here below. But basically, it's about a halfway point of the prior uptrend. Yeah. Then we will go over the last picture already. I think this video is going to be under 10 minutes, which is, well, I guess good, because it wasn't an important chapter, but it wasn't too deep in any way. Which is but a flat head and shoulders, basically meaning the neckline is kind of flat, which it is not on a normal head and shoulders. And as we can see here, just follows the neckline, does have a higher head, like in both situations, but there's just not a whole. This is also a continuation pattern. I think it's good to recognize. And yeah, that's it pretty much for the figures. There's one important keyword that was mentioned at the end, which is divergence, which basically means these indicators could mean that the price is going to continue, right? But divergence basically means the opposite direction of an indicator. So that could be an important trend reversal if it doesn't follow the trend or the pattern.